So, what's a strong personal credit score when it comes to business funding? And what correlation does your personal credit score have towards business funding? Let's talk about it in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your personal blueprint for prosperity. So, when it comes to personal credit, when trying to achieve business funding, this also is very nuanced because it really depends on the type of business funding product that you're going for. When it comes to your personal credit, there are business funding products where personal credit is completely irrelevant, and then there's business funding products where personal credit is essential. We're going to quickly cover a spectrum of different funding products and where your personal credit is going to fall in that in this video right now. So when you start to think about business funding, it's very similar fundamentally to the personal funding region when it comes to what leverage does the lender have and the ability to secure themselves if you default on a loan. And when it comes to business funding, what they're usually looking for, again, is some type of collateral. So your business funding could be very much predicated on your business, what collateral is going to be had or what recourse the lender has to be able to recoup from any losses if you default. So your personal credit is actually going to be, again, just kind of a determinant of the cost of financing, and it's only going to really start to kick in the least collateralized a funding option is. So starting from this end of the spectrum, where we're starting to talk about highly collateralized items, where your credit score is either has minimal impact or is not relevant at all, is going to be on this end of the spectrum when we start talking about funding options like stock portfolio or 401k loan options. So there are business funding options where if you have a reasonable size stock portfolio or a 401k that is not being currently held by an employer, you can actually use that as collateral to get funding for your business. And in most cases, you actually won't need your credit score at all because you are going to be collateralizing your loan by your stock or 401k portfolio. And so your credit score is going to have a very low to no impact whatsoever when it comes to this type of funding. Another funding option is going to be, invoice or factoring. So this is basically where you're going to get a loan based on, future dated invoices that you may have coming in from your clients. So you may invoice a client and they're set to pay you every 30 days or in 2 weeks or whatever the case may be. And you have a log of these, you have a portfolio of these coming in. You can bring this to certain lenders and they will lend you so much against your invoices. So you might have $10,000 in invoices in the next 30 days, and they may be willing to lend you that or more, or 6 months worth of those invoices or 3 months worth of those invoices. Again, your personal credit score is not going to be very impactful here because, again, they have collateral against your invoices, your future invoices. Equipment financing is another option. This is where your business has some kind of tangible collateral, meaning something like equipment that the business that is, essential to the business's functioning, and the type of equipment that does not deplete in value. And so, depending on the type of business that you have some equipment, tools, or whatever the case may be to operate in your business, and you can use this as collateral towards funding. And so in this case, yet again, your credit score is going to have a minimal impact. But in these cases, the better your credit score, when it is relevant, the better the terms of the financing. But in many cases, you can have low to no personal credit, or, as far as like a healthy personal credit score, and get approved for these various financing options that I've already mentioned. When you start to talk about financing options that will require you to have a personal credit score that is reasonable to great, we're starting to talk about options like, business credit cards, lines of credit, all the way up to, the mecca, if you will, of business funding with something like SBA loans. When you look at business credit cards, business lines of credit, business loans, unsecured business loans, and SBA loans, each of these have the commonality of not having any collateral. So SBA loans could be an exception. They may want you to still have some kind of collateral in that equation. But the reality of it is largely these are funding options that have little to no collateral for the lender. So now they're relying on your personal financial and business financial reputation in order to make this loan to you. So when you look at business credit cards, in most cases, you're going to want to be somewhere in the region of a 680 credit score or higher. 680 is a very good benchmark. Now, mind you, you have immediate disqualifying factors here. You can have, bankruptcies, public records, or some kind of recent collections or charge-offs that can eliminate you, even at a 680, could eliminate you from being approved for these credit cards. But if you don't have any of that going on, or at least it's not recent, maybe it's older than 2 to 4 years old, then you likely at a 680, if you have a robust under credit profile, maybe about 4 to 5 primary trade lines on your account, and they're all a year or two old, or older, then a 680 will get you in the door in most business credit cards at most institutions. You may have a little bit of flexibility on this at local credit unions and smaller banks, but looking at some of the regional to bigger players, you're looking at a 680 to get approved for business credit cards. And the higher up you go, the more perks, benefits, and likely higher credit limits you're going to see. When you start talking about business lines of credit and business loans, unsecured business loans, you're again going to be somewhere in the 680 at the bottom floor, but really somewhere around the 700 mark and above in order to qualify for business credit lines and lines of credit and business loans that are uncollateralized. Somewhere around 700 is going to be your ground floor. Again, might be some exceptions here and there, institution to institution, but this is a general guideline for most institutions. When you start looking in the range of SBA, it gets pretty stringent. You're going to need somewhere around a 720 FICO score or higher. And your business, it also helps if your business has its credit together, has a healthy payback score. This isn't a guarantee, and it definitely won't get you the loan by itself, but it does help. But sticking to personal credit, you're looking at about a 720 as the ground floor when you start talking most standard quality SBA loans. There's exceptions. The SBA provides a plethora of loan products. In some cases, your credit score isn't going to be as relevant, or it can be lower. But in most cases, when you're looking at some of those more popular SBA loans, you're going to be looking at somewhere between 720 and up. So this is just to give you guys a basis. When you start talking about personal credit to business funding, it is very relevant unless you have strong collateral. Thank y'all for tuning in. I know this content was valuable for you. Like the video. This is JP from Blueprint for Prosperity checking out. As always, I want y'all to stay focused, stay in motion. I'll see y'all soon.